If you're a new Filipino investor, you're probably wondering, how can I use these investments like cash? In today's video, we'll talk about 3 ways every Filipino investors can use to benefit from their assets and portfolio. If you're new here, my name is Ron and welcome to Pinoy Stock Investor. But before we start, let me know down in the comments if you've already bought or funded something using your investment assets. It'll be really interesting to know. And these are not financial advice. Make sure to consult or talk to your financial advisor before making any financial decisions. So let's start. In your investment journey, you probably realize that your portfolio isn't just a locked account. These are not just numbers on a screen. Okay? These are real assets. And in today's video, we'll look at the exact ways that we can use or we can benefit from these assets like real cash. I was trying to figure out what would be the best metaphor for this episode, and I think I figured out a really curious way or a really great way to do it. Imagine you were able to set up your own service transport business and you were able to acquire 50 jeepneys. Oh, that's really great because in the Philippines, jeepneys are one of the main source of transportation in the Philippines, because not everybody have cars and not everybody have their own private vehicle. So riding a jeepney is really great. And imagine you have 50 of it and you suddenly needed a lump sum of large cash. Example, you're gonna have to fund a wedding, or you're gonna have to build a house, or you're gonna fix your house, or there's a emergency that you need to use a lump of cash. You're not going to sell all the 50 jeepneys that you own. You're probably going to get one, clean it up, set it up, and then sell it. You still have your whole fleet and it will still be able to generate cash for you, but you were able to solve that issue where you needed cash because you were able to get one part of your assets and sell it. This is what we call strategic selling, which you can also do to your stock portfolio. In stocks reality, when you own growth ETFs like VOO or QQQM and you needed cash, when you need a liquid cash, you don't sell the whole brokerage account. You don't sell the whole holdings that you have. You only sell fractional shares of your holdings. You withdraw your target amount by cutting down your share count by a tiny fraction, leaving your core assets in the background growing. This strategy maximizes your long-term wealth because you allow majority of your assets or your fleet to continuously build compounding momentum uninterrupted. The downside is that you're gonna have to do the selling yourself manually. You cannot automate this thing, but you also have to be aware of market winters or when the market is on the downside or downtrend, because you are going to have to sell more of your assets because the price went down. The best example of this is what we call the 4% rule. In the financial world, there's this concept or strategy that is called the 4% rule, wherein you're not guessing on how much are you going to sell to live off from your investment. You're going to sell 4% of your investment and live off of that for a whole year, because in theory your investment will generate that 4% back so that you could get that next year, or you could use or sell off 4% again next year. And you can definitely adjust it depending on how the inflation goes. Okay, just a quick shout out to Ms. Christine Ortega Lina from Maryland. Thank you so much for watching and thank you so much for your comment. Congratulations and good luck on your investing journey. And if you want a shout out like this, just drop in the comments where are you watching from and have you started investing. All right, let's continue to the video. Now, selling a Jeep is okay when you need a massive chunk of cash. But what if you don't want to shrink your fleet? What if you want to keep all the vehicle that you own, but you still need to live your life day to day? You still need money. This is where the pure income shift comes in. Instead of selling a vehicle to support your life, you're going to live off the boundary. That's what we call it in the Philippines, the boundary from your jeepney assets. When you need money to buy groceries, for rent, to support your family, you don't look for a buyer. Instead, you just wait until your drivers finish their routes, pull into your garage, count the fares, and hand you your daily net profit share or your boundary. The physical asset or the jeepney stayed registered under your name and they stay in the business. But the cash flow generates and keep money in your pocket. In the stock market, this is how you actually treat a dividend asset or a dividend stock. You never click the sell button. Your core investment stays completely intact. Instead, the companies and the funds that you own or that you're holding pays or send a distribution, a cash distribution straight to your brokerage account or your bank account without you doing anything. Usually it's every single quarter. Sometimes there are assets or there are stocks and ETF funds that pays monthly. This is where dividend paying companies, dividend funds and ETFs like SCHD and REITs really comes in very handy. The good side is that this gives you an incredible peace of mind because your cash flow is fully automated. You get to keep 100% of your assets in your brokerage account while the market does all the heavy lifting. The downside is that it requires time and a larger amount of capital. You need a big fleet of jeepneys out on the road before the boundary actually replaces your regular income. Imagine you got hit by a major emergency. And at the same time, used vehicle or used jeepneys are at an all-time low. If you force yourself to sell your fleet, you will definitely lose money. Instead of selling, you collect all the papers and the registration of your vehicle and your fleet and go to a lender. Say, I need a short-time loan and I want to use my running business as a collateral. The bank hands you the money with a low to moderate interest rate, hopefully. But the best part is that 100% of your jeepneys are still on the road and driving routes and making money as if that is nothing happened. And you were able to resolve your real world emergency using this money that is loaned, using your business as a collateral. In the stock market, this is what brokers call using your buying power or portfolio line of credit, also known as securities-backed line of credit. When a crisis hits on a market crash, you don't panic sell your stocks at a loss. Instead, your brokerage account lets you borrow cold hard cash against the total value of your stock portfolio. The cash is directly sent to your bank account while your stock portfolio stays 100% invested, continuing to compound and recover undisturbed. The good side? You get to have access to instant cash in any case of emergencies and big life moves without triggering any taxes or stopping the compound interest of your shares or your stocks. You don't need to sell any shares at a loss. The catch is that it introduces you to a new risk called margin call. If the value of stocks went too low, the value of your collateral crashes. And if that happens, the brokerage that lend you money will be forced to ask you for the payment of your loan. And if you can't cover your loan, they will sell your stocks to cover your debt. It's a very powerful tool, but you definitely have to use it safely. The best part is like building your jeepney fleet business. When it comes to investing in the stock market, you actually are not locked into one rigid setup. You have the total control. You can mix and match whatever kind of cash options or strategies is best for your life goals. Let's look at how you can customize your business or your investments based on your lifestyle. The first is using it as a lifestyle supplement. You still have your day job or your active business, but you use your investment as a financial cushion to take out the stress of your daily life. The mix, 70% for your collecting boundaries or dividend assets, plus 30% to your growth assets. You can adjust it depending on how much you need. If you need a higher dividends, you can increase it to 85, 80, and as long as you have that mix of growth and dividends. How you can use this is that you leave that growth part alone and you let that dividend paying companies or dividend paying boundaries or boundaries from your jeepneys goes to straight to your bank, and you can transfer it to your local bank and make it as a payment for your recurring bills, to cover your recurring bills like your kuryente or electric bill, your internet or groceries, or budget for your parents back at home. The next one is FIRE Blueprint, or Financial Independence, Retire Early. And a quick disclaimer is that this topic or this part of the video actually needs its own video. I'm just opening a small window to this to show to new beginners that you can use your investment and you can benefit from your investment just like how you can use it in FIRE, or Financial Independence, Retire Early. The goal is to quit your 9 to 5 boss completely. Your portfolio is now your main source of income. The core requirement for this is you need to know your FIRE number. Your FIRE number is the number that your portfolio needs to reach in order to live off it. To find it, you need to multiply your annual expense by 25 or your yearly expense by 25. For example, you need to live for a whole year. The cost of living that you incur for a whole year is 400,000 pesos. Your fleet, your jeepney fleet, needs to produce or needs to value at least 10 million pesos. The mix will be 50% will be collecting your dividends or your boundaries, plus 50% will be your strategic fleet sales, or at least the 4% rule. Your boundary payouts covers baseline of your basic survival needs, like your food, housing, and basic medical care. Now, this keeps you perfectly safe during market drops. Then, whenever you want to travel, buy a car, or upgrade your life, you do a strategic harvest, or you pull out one of your growth jeepneys and sell it by using the 4% rule. And because your fleet compound faster than you pull out your money, your account balance will never run out. That's a very optimistic way of looking at it. It really depends on your financial lifestyle. So do this with a bit of a caution. If you force yourself to sell your assets at a lower price, you lock in those losses. Now, if emergencies happen to you, you can always use your asset as a collateral, keeping them still 100% invested in the market while you are able to use their value. They're still compounding and they're able to recover from the market crash. Just be really careful on how you use this lever or how you use this emergency lever. If you're looking at your life right now and looking at your future goals, where do you see these cash out strategies helping you? Is it from lifestyle supplement, wherein you're using this as a financial cushion to relieve stress in your life, or as a FIRE, wherein you want financial independence and to retire early? Let me know down in the comments. Remember that investing in the stock market isn't just staring at your phone, looking at that green numbers going up or down. It's a digital equivalent of actually buying a house and lot, or buying or investing in a business or jeepney business. It's a real asset that could take you from absolute control of your financial freedom, safety, and ultimately over your future. If you get value in this video, don't forget to subscribe and like this video. It's free and it will definitely help my channel. I hope you guys like this video. Have a great day and peace.